Are you ready? Why invest in property in UK? So in this talk, I'm going to focus on buy-to-let investment strategy. Simply, who doesn't know what is buy-to-let? Everybody knows. That's great. So you buy a property, you let it, you hold on to it. So you don't sell it in a year. It makes no sense. Why it makes no sense to sell it in a year? Because always when you buy, there are some costs of it. Sourcing company, surveyor, conveyancing. If you invest for a long period of time, then all these costs are going to fade away. If you paid £1,000 for conveyancing, but you bought a property for 50 years, it doesn't matter. Returns on investment. What interest do you get in banks at the moment on your cash? 3%. Santander gives you 3% on your current account up to £20,000. They take £2 of, okay, let's say, but it's only up to £20,000, and they may remove it anytime. I have one buy-to-let in UK. I'm getting 10% yield. So I bought the house for only £53,000 cash, and I'm getting £5,200 rent a year. So 10% yield. Simple. If I can do it, you can do it. When did I buy it? May. Where is it? Hull. HMOs can give you even 20% returns. So HMO, house of multiple occupation, you buy a house and you split it into rooms. When there's like 4 rooms, it's easy. When it's a really big HMO with 10 rooms, then you need permission from the council. So it's a bit more complicated, but the yields rise up extremely because you charge more money for rooms when you split it. Property goes up in value. Over a long period of time, always. There's a cycle, like in everything. So the economy goes down, the prices of houses may go down. There may be some correction of prices in London one day, because soon even millionaires won't be able to buy in London. But over a long period of time, the property prices always go up, and in UK extremely. Power of leverage. Do you know what leverage is in this case? So you use, okay, one person knows. So you use your mortgage as a leverage. So you have £25,000 deposit, you get on it £75,000 mortgage, and you buy a house for £100,000. On the £25,000 that you've put in, you get your rental income, like 6, 7, 8%. Then on the £75,000, you pay mortgage, let's say interest only 5%, but your rental income is higher if you're doing this well. So you get money from the money that you borrowed. Because you pay 5%, your rental income is higher. Second, property goes up in value. So you took £75,000 mortgage. Your house price is going to double in 20 years. So you bought a part of the house for £75,000, and now this part of the house is worth £150,000. But your mortgage is worth still £75,000, unless you paid it. So you earned money on the money that you borrowed. Okay, why am I so sure that property prices in UK will be going up? Simple economy. Supply and demand. Demand in UK is high. The population numbers, just people coming all the time to UK. It's not stopping. People live longer. People in UK like buying houses. And due to the Baker's report, we need 250,000 houses built a year, and this is a lower estimation just to keep up with the current demand, so with the current prices. And we are building like 100,000 houses a year. It's terrible. It should scare you because it's bad for the UK economy, but it's good if you're buying houses because the prices have to go up. Planning laws. There's really strict, terrible planning laws in UK, so developers have problems to build houses. It's hard to get planning permissions for new developments. There are green belt rules. It's safe when you have a house because you know that nobody is going to build tower block right next to the tower house, to your terraced house.
Unless the council want to do it themselves, in which case they seem to break all the rules under the sun.
Okay, so there are always some risks, that's right. Okay, why buy property in Norfolk or England? So I'm talking about anywhere from Liverpool, Manchester, Leeds, even up to Hull. At the moment, London is the powerhouse of UK, and all the rest of UK is not doing well. You know for sure government is trying to do something about this. They are not investing in London anymore. Anything that happens, they are trying to invest somewhere else. The most investments, they are pushing economic growth the most up north, like Manchester, Liverpool, Leeds. Like you see, there's been even discussion about moving some governmental institutions to Manchester. Like part of BBC was moved to Manchester. How much did it cost? And how much effort was it? What a mess was made just to make BBC being less London and to bring some money to, where is it, Salford in Manchester. And okay. Property prices, due to Rightmove house pricing index, property prices last year in Manchester grew 18%. 18%, more than in London where it was 17. Due to Rightmove, so this is extreme, and the property prices there are booming at the moment. Just go to Rightmove, target houses in Manchester, and call estate agents. You will see that it's hard to even make a viewing. So it's not only London. Okay, next one, houses give you nice motivation. When you have £100,000 on your bank account, is having £120,000 a motivation for you? Will you change anything? Can you feel it? I don't care, but when you buy a house, brick and mortar, something you can touch, see, that really motivates you. I have 2 houses, I have 3 houses, 5 houses. Okay. You can tell your friends how many houses do you have, and you feel good then. You can't tell your friends how much money you have in your bank account, that would be rude. It's stupid. You can set up really nice goals with property, like I want to have a portfolio worth £1 million, or 10 houses. I know you can do this with the money, but it's not so safe. With property, it's easy to achieve a financial freedom. You know you have 10 houses. They give you £5,000 income a month, and it's very easy. You just live off this income and keep the houses. It's much harder to do this with funds, cash. How much? You never know how much financial markets will go up and down. You can do something good. Actually, there is always a rental demand. People don't want to rent. You can be a good landlord. I know there's some people complain that buy-to-let investors are terrible, but we don't listen to these people. Yes, they complain about all entrepreneurs and businessmen and think that if nobody will work, then everything will be great. What other options to invest money do you have? There are good. Cash is not an investment. It's hard to get even on your bank account. It's hard to get interest rate higher than inflation. What funds do you trust? Property? Do you trust fund managers and all these funds? just, I won't start the discussion now, just read about this. You know, don't trust them. The fund managers will just trick you with the numbers, and actually all money goes to them. You're not winning in it. Pension plans. Oh, don't even let me start. Annuities, they die with you. So when you save on some pension plans, you die, you don't get this money. When you invest in property, it's inheritance. You can give it to your kids. You can secure your family for next generations until the houses will fall down. Okay, I also really pension plans. My personal experience. I lived in the Netherlands before. I signed up to a pension plan there. Seemed really good deal back then because my employer was paying money to this pension plan also. And there was one point in the agreement. If I moved out from the country, I will get my money instantly. I moved out of the Netherlands 3 years ago. I still haven't seen my money. I have a solicitor working on the case. And the money is promised to be on my account sometime soon. There's already lots of people promising that my money will be there, but I still haven't seen them. So I don't trust them. I would never give them my money for 50 years. It gives you a job. You, as I told you, have higher returns on HMOs. So if you buy 2 houses, you want to manage them as HMOs, 4 rooms, it's lots of work. If you really got nothing to do with yourself, you can have a job from this. Really nice, you're your own boss, you manage this by yourself really nicely, and your job is to maximize investment, rental income from your houses. Because you can go easy. You can buy a trust house, give it to a lettings agent, hands off. But if you want, you can be hands-on, do everything by yourself, maximize your income, and have a job from this. Your own choice. So you have your own business, actually. Just your choice how much you want to be involved.
I think you're presenting the positive side. So I used to own a flat, and I did rent it out. But I mean, if you manage things on your own, there's an opportunity cost because you could be doing another job or building a career. But
so as I told, if you want, if you don't want another career at the moment.
Okay, but I'm just pointing out there are negative sides to it. I mean, I went to an agent and went backpacking for a year, and I got some lad who had a criminal record, and I did manage to boot him out, but it was a nightmare. So it's not necessarily a pleasant job, and in this economic climate, you can get people who get into arrears, refuse to move out. So I appreciate your presenting the positive side, but there is
Okay.
a negative side.
So my next point is risks, but I won't tell you now because it will sound really bad. If you work with the wrong people and you don't have experience, you will lose all your money. If you had a bad lettings agent, who recommended the lettings agent to you? Did you take to him off the internet?
Well, I think they took advantage. I went away for a year backpacking, which sent you to my parents had authority, and they weren't in a position to manage the letting agent, so they then took advantage. But I could tie myself down on basis of what I was letting something out and coming back on that. The responsibilities of it as well as positive side to be necessarily relevant on that.
Yes, so that was my last point. Of course, everything can go wrong. We need to know what you're doing. Then if you know what you're doing and you invest your cash, no mortgage, there's no risk. If you bought a good house that is lettable, and you have good lettings agent that will give you good tenants, is there a risk?
Well, you never know what's going to happen to tenants.
Yes.
I'm just presenting a slightly more balanced picture. I mean, I agree, because the thing is, if you look back 50 years, property has gone up tremendously. The economy here has done well. If you look back at our parents and our grandparents, their standard of living,
there's some
Means
people.
there is a great opportunity for a smaller segment of doing what you're saying, and if you can jump on that trend, then that may be a great thing to do. So I'm not necessarily disagreeing with you, but there's lots of things going on really with this whole issue.
That's right, and some people want to rent. It's not that they don't want to buy. I want to rent. I don't want to live in one place for 20 years now. I don't have a family at the moment. So I want to rent. I want to move somewhere else to a better place
And
in 2 years.
Expensive people say, I want to buy, and I can't.
Okay, the last risk.
Well, no, I think it's happened more over the last 10 years. That seems to have been developed into a real problem for people. I'm just saying there are long-term trends, and I agree. Property has been fantastic, and it may well continue to be fantastic. So I'm not really necessarily disagreeing with you.
If you look at the property prices up north, they are still really low. If you compare them with like France, Spain, where there was a big financial crisis, Italy, then the prices are really low. But if you compare with the rest of the world, the property prices up north these houses are cheap. You can, up north, yes, not in London. That's why I wouldn't buy in London at the moment. Okay, let's start the discussion because I finished my talk. Any more questions?
When you said you're getting 10% annual yield, was that including the increase in value of the property, or was that just from rent?
Just from rent.
Nice.
The property will go up in value.
I think I missed that. Where are your properties? Just sort of have interest.
In UK, I have one in Hull.
In Hull? Oh.
Yes,
So do you live in London or?
I live in London.
So are you renting in London?
Yes. So I want to rent. I wouldn't buy.
Why wouldn't you buy London?
Because last year I thought that other places good to live. Now this year I have a mood to live closer to the central London. So at the moment I live in Haggerstone. I can bike everywhere. I didn't use the tube for a few months because that's my mood at the moment. If I have a family, I will move out of the center somewhere else. If I will work somewhere else, I will move somewhere else. I wouldn't buy. But to buy makes sense only for a long period of time. You have cost of, for me it's cheaper to rent. Because if you buy and you will live in this property for, you spend lots of effort to buy a house for you, to set it up, to renovate it, and then you move out in 2 years, you just lost money. And especially when you buy a house for yourself, you tend to overpay because you don't treat this as an investment so much. If there's a house up north, £70,000, I can call the estate agent and say I will pay 65. That's my offer. If he says not 70, I don't think it's a good investment. I don't continue the conversation. When you buy for yourself, you say, I want this house because I want the house in this area and I love this garden for myself and really a house on the corner, I will pay this, I will pay 72. That's how you buy for yourself.
I think, so I bought when I was quite young a flat in Camden, but I think just pointing out the thing you talk about people viewing it as an investment, I think that has developed as a trend over the last 30 years, which is fine, it's just the way things have developed. An increasing proportion of buyers viewing properties as an investment, and I don't think buy-to-let mortgages were around 25, 30 years ago.
Yeah, they are new.
Yeah, so things, there's just long-term trends which do have throw-up opportunities if you can get on the results of it.
There's a big opportunity. Buy-to-let mortgages in UK are so easy to get. Residential mortgages, the rules are getting stricter and stricter. Buy-to-let, it's so simple. You need to have a deposit. If you want to buy up north, let's say you have £25,000, it's surely enough. You have £25,000 of yearly income, you will get a buy-to-let mortgage. This is simple. You don't even need £25,000 income. With BM Solutions, if you have even £10,000 income a year and you already own one property, they will give you a mortgage. Buy-to-let, that ones are really simple to get. So this is an opportunity for you to use the leverage.
Do you have a job down here in London at the same time at the moment? Or?
Yes.
Yeah. How do you find balancing, obviously, running the properties, looking after them, with a full-time job?
I have one house in Hull and one apartment in Poland.
Yeah.
It's no hassle to me at all. My house in Hull, I have a lettings agent there,
Okay.
a guy,
Just
that
like
I,
agents do.
a good guy that I knew before, recommended to me. I wanted to get to, when I got the house, I got the keys, I wanted to do this by myself, I wanted to go to Hull again. So I went there by myself, I pick up the keys, I signed agreement with my lettings agent 20 to 3 p.m. At 3 p.m. we had first viewing and house was let. And the tenants are there and they are paying. And I spent £0 on fixing anything.
Yeah.
They had no complaints, anything's wrong, they fixed this by themselves. It's the same with my apartment in Poland. In UK there's actually no DIY culture. There are DIY shows in TV, but the DIY culture is not good. My apartment in Poland, I never had to send anybody there to fix anything. People always fix, my tenants always fix stuff by themselves. And if they want me to pay, they just send me bills and then they give me less rent. I never had to do anything.
There is one thing, I mean, aside from all the discussion about whether housing as an investment makes sense or not, there is one trouble in all this, is inflation. So if you actually see at the data from the last 40 years, in real terms, house prices have doubled, but not more than that. Which basically means that over 40 years, it's not necessarily a great investment compared to others.
Do you know a better one?
Stock market has gone better. I mean, I'm not saying that this is the rule forever or for it all depends on how you partition your data and how you compare it to inflation and how you compare it to, the usual thing that, past performances are never a guarantee of future performances. I agree with the fact that housing, if you see the last 10 years, has gone massively well. But if you spread it over a longer period, it's not that well.
How would you invest in the stock market?
I'm not saying I would or I wouldn't. I'm just saying
How-
that if you
how-
do that comparison over inflation, it's not that massively good as it used to be.
Yes, that's right. That's why I'm
So,
talking.
I mean, it's not like it's gone 10 times more as value. It's that.
That's
That
why.
doesn't mean great.
That's why I'm talking about inflation versus yield, return on investment. With houses, you have return on investment, you have a capital gain that you're talking about, but I'm not comparing capital gain to inflation. I'm talking about return on your investment, where yields are higher than inflation. And besides this, you have a capital gain, and besides this, you have the power of leverage. So
Well,
triple
the thing
income
is,
versus one.
Sustaining a yield of 20%, it's really hard over the long period. Like as you say, in North of England now, you manage to have a 20% yield, but I would question if you were able to do that for more than 2 or 3 years. Like in London, that maybe was 10% 5 years ago, it's now 5%. So
Yes.
the problem is the yield also has a correlation with the wider economy. Actually, it's a correlation with the growth of the economy in a specific area.
I think
So-
it's
If-
anywhere outside of London as well. Like, I mean, London's a bit of a strange one in renting, in property prices. I mean, it's all quite self. Something like North Wales, or not North Wales, North England, North West kind of thing. My family has some places there, and they kind of. I mean, you're looking at sort of 7 or 8% return just in rent. It's not the house purchase price or.
Yeah, absolutely.
Yeah, so
So
I think it does vary, you're right, and sometimes some places good.
the point is, in economic terms, if you have a sustainable 10-20% yield, say sustainable, the price of the house will adjust itself. That's how the market works.
Yeah, okay.
What I mean is, if you have that yield, it means that it's not that safe. It's not that sustainable. So the two things, over long periods,
The issue is earning money is not easy, and there isn't any better investment. Stock, if you want to buy stocks by yourself, it's proven that people fail in buying stock by themselves. They always make mistakes. They panic. They sell. They can't do this. If you do this for me, download the book Monkey with a Pin. It's really easy to read. For half of a book, the guy is proving why you shouldn't invest in any funds or buy shares by yourself. Then in second half of the book, very funny, he's telling you if you're stupid enough to invest in shares and funds, how to do it. But first half, don't do it. 100 pages. And really, if you get some funds and you get these numbers, this 5% yield, 6% yield, this is well prepared. They use hundreds of tricks. I'm not a specialist on that one. But simple stuff, FTSE 100. They tell you have 5% yield. But the companies in FTSE 100, they change every year. So if you buy 100 companies that are this year, 2 of them has fallen out from the FTSE, and there are 2 new ones, but you still have these 100 previous ones. So actually, you don't get this 5% yield if you bought all these 100 companies. Okay, this is just one of them.
I think we're at time.
Thank you.
Thank you.